Well, the chip sector in general has been getting a boost this week. It's in part Micron. It's in part a new report from Bain & Company, which highlights that the market for AI products and services could hit up to $990 billion by 2027. To talk more about that is David Crawford. He's Bain & Company Global Technology Cloud Services Practice Chairman and one of the authors of that report that got so much attention this week. So, David, thank you so much for being here.
Happy to be here. Thanks for having me.
So as you know, there has been an enormous amount of attention on this Gen AI wave, and presumably that's why you guys decided to dig a little bit more deeply into it. I'm curious, as you look at that up to 55% annual demand increase through 2027, where you see that coming from specifically, how that's going to sort of play out, and also how it's going to change over time.
Yeah, great question. I think we see three kind of broad pockets of growth. One is at the halo end, at the high end of the market, where the large hyperscalers are racing to kind of build out the best capabilities. That's generating an enormous amount of demand that works its way back through the supply chain and creates just shortages in a spectrum of spaces. The second is enterprise adoption, where we know the trends are smaller models, more specialized models, open source, et cetera, but likewise requires computational capability. In some cases, they're using special purpose compute and so forth. That's the second big pocket. And then the third is the independent software vendors themselves building these capabilities directly into their products and running them in their own data centers. So between the three, there's just actually a lot of demand, and those three will interact over the coming years as well.
Do you see AI as being sort of fragmented looking ahead, David, globally? Meaning, is it going to be developed and deployed very differently depending on the countries, geographies?
Yeah, important question. We think relative to, say, something like a cloud disruption or big data, there will be more interest in sovereign ownership, sovereign control, sovereign domiciled data centers and so forth, because it's broadly perceived that AI will be quite different in that it'll control culture, access to health and welfare, things like that. And so we think that the sort of state interests will play a much bigger role in the ultimate location of where all this occurs.
I was also struck by some of your research in this report on the size of different enterprises and what they're spending and how much that spending has changed over the past year. And, the bulk of enterprises out there are on the smaller side, so they are spending less as a function of their size. But are they going to be left behind? Are they spending enough? How are you thinking about that?
Yeah, we'll see as time tells. But yeah, we were astonished to see the rate at which, for example, in the report we published, the number of companies is spending over $100 million in their annual IT budget alone on AI. And with large enterprises, that's doubled. But it's not confined specifically to large enterprises. Smaller enterprises, whatever level they are spending at, has actually doubled as well. And so you can pick any kind of spend or IT budget threshold, and they're almost uniformly increasing their spend.
Record earnings have been reported by many of these same tech corporations. Even in a recession, NVIDIA's largest clients can afford to keep investing in artificial intelligence because they are comparatively well insulated. Although the technology is still relatively new, investments are steadily increasing. Regardless of whether the economy stops, NVIDIA is more likely to continue outpacing the larger market because to its alliances. Better yet, important alliances will probably grow as you get older. Customers who receive top-notch AI processors from NVIDIA are more likely to remain loyal to the company and make additional significant expenditures. For almost 10 years, NVIDIA has collaborated with Amazon. More recently, Alphabet has extended this relationship. Taking into account the company's revenue and earnings growth rates, NVIDIA's valuation is still quite inexpensive. In contrast to other large tech companies, NVIDIA's 58x trailing P/E ratio may seem excessive, but on an annual basis, the company has been more than tripling its net income. The stock of NVIDIA is valued at a 43.5x P/E ratio going forward, which gives the valuation a more reasonable appearance. In Q2 FY25, the company also recorded a 152% year-over-year increase in net income. High net income growth is facilitated by high revenue growth. The forward P/E ratio ought to keep declining if Nvidia reports triple-digit sales growth over the course of a few more quarters. Can I purchase Nvidia stock? Right now, 42 Wall Street analysts have rated Nvidia stock as a strong buy in agreement. At $152.44, the average Nvidia price target suggests a potential upside of almost 23%. The most optimistic price target, $200, represents a 62% increase over the present market value. Regarding Nvidia stock, Wall Street analysts have 39 buy ratings, 3 hold ratings, and no sell ratings. Without a doubt, Nvidia is at the forefront of the artificial intelligence revolution. It has taken the lead in meeting the demand for artificial intelligence skills. Some of the world's top companies are among Nvidia's clientele, and they will undoubtedly keep spending money on AI even in a downturn in the economy. Growth in revenue and net income is still excellent, and Nvidia's stock doesn't appear to be overvalued when viewed through the lens of forward multiples. The consensus strong buy rating is a result of the similar sentiment held by several Wall Street analysts. They and I both still think highly of Nvidia. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Nvidia shares are in the red today, off just about 1%, taking a breather from its most recent rally. The stock had closed higher 4 days in a row. The move to the upside on the back of CEO Jensen Huang no longer selling the chipmaker stock, at least for the time being. Also, some of that optimism playing out not only in Nvidia, but more broadly the AI chipmaker space. That was fueled by Micron's strong earnings report. So here to discuss what might be next for Nvidia, we want to bring in Richard Windsor. He's Radio Free Mobile founder. Richard, it's great to have you here. So talk to me about Nvidia. Here we are today. We're seeing this slight move lower, but we have seen this return of optimism, to say the least, surrounding Nvidia. Where do you think the stock is headed from here? Is there much room to the upside?
Well, I think it really depends on the overall macro. If you look at artificial intelligence in general, and you want to have a position in artificial intelligence, then Nvidia is definitely one of the lowest risk ways to do that. Simply, if you compare that to other, particularly in the private markets, companies like OpenAI, where their valuations are far more stretched. Now, the question you have is over what do you think is going to happen to the market overall? Because Nvidia has a high beta, it's very volatile. If the market sells off, then Nvidia is going to go down more than the rest because it has this high beta. And that's really what I think is going to govern, certainly for the next quarter, because you're going to have no more data points out of Nvidia until at least another 3 months or so. And so consequently, I think it's going to go back and forth, I suspect, in line or amplify the signal of the market rather than anything specific to Nvidia.
Yeah, it's interesting. I'm looking at a chart right now indicating that while Nvidia was the biggest driver of gains for the S&P in the first half of the year, now Apple has taken over that top slot. Is that a bearish signal for Nvidia moving forward, or is it a sign of more kind of volatility in the broader market? How do you read that?
Honestly, I think it's just more of a normalization. If you look at Nvidia's year-over-year gains in the first half of this year, and also the degree to which the company beat expectations, it's not such a huge surprise that that was the major driver of the S&P in the first half. You look at it now, you're in a situation where very, very big growth is expected in the stock. The year-over-year comparisons start to become more challenging, and so obviously you're going to see the performance of the shares come back somewhat. And I think really that's all that's going on here, because simply if you look at the outlook for Apple, which shipped a brand new product without its main feature, and the outlook for Nvidia for the second or the fourth quarter of this year, frankly, I would be more interested in Nvidia than I would.
Nvidia remains a favorable investment opportunity. Over the past few years, Nvidia has been a formidable force in artificial intelligence, competing with Microsoft to be the most valuable company in the world. Though many may believe there is no further upside from here given Nvidia's 156% year-to-date gain and 2,700% rise over the previous 5 years, artificial intelligence is still in its infancy. I'm optimistic about the stock because I recognize the potential for AI and appreciate Nvidia's distinct position in the market. Examining the AI boom that brings me to my optimism for Nvidia stock. Even if artificial intelligence has already captured investors' attention for a number of years, the surge is still going strong. Artificial intelligence is attracting large corporate investment, and from now until 2034, the market is expected to increase at a compound annual growth rate of 19.3%. Businesses can improve their goods and services with the use of artificial intelligence. To strengthen its cybersecurity software, CrowdStrike, for instance, has been investing in Charlotte AI and other AI technologies. In order to assist people and companies in producing better photos and videos, Adobe has also made investments in artificial intelligence. The AI chips that drive these technologies are provided by NVIDIA. Even though other semiconductor companies sell AI processors, NVIDIA is innovating its chip lineup to keep a step ahead of the competition. The business is developing a new Blackwell chip, which should be available in 2025. The exorbitant expense of AI infrastructure, in my opinion. Artificial intelligence currently resembles the early internet era. There are significant entry obstacles for this revolutionary technology. A large portion of the new business is won by NVIDIA, which supports my optimistic view of NVIDIA stock. The Magnificent Seven's major tech firms have been investing billions of dollars in this technology. Larry Ellison, the creator of Oracle, recently stated that the business is falling short of its AI infrastructure targets. To close that difference, Oracle will probably look to NVIDIA, which may mean billions of dollars more in sales for NVIDIA. Elon Musk's businesses are involved in this as well. On 2024 alone, Tesla and xAI plan to invest a total of $20 billion on AI initiatives. Businesses don't appear to be faltering and appear committed to continuing to make investments through 2025 and beyond. It is costly to set up, scale, and maintain AI infrastructure. NVIDIA gains a great deal from this dynamic since it has created a virtual monopoly in the market. By the end of 2028, businesses are expected to almost triple their spending in AI, according to IDC. According to this analysis, there should be a 30% compound annual growth rate at that time. Numerous partnerships of NVIDIA, the who's who of big tech and publicly traded companies, is rubbing elbows with NVIDIA. It adds to the optimism surrounding the company's future. NVIDIA's partners have substantial financial resources. Amazon, Alphabet, Meta Platforms, and other industry titans are partners of the AI chipmaker. So what does this really mean for NVIDIA's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Some breaking news around arguably the most important stock in America, if not the world. That is NVIDIA. Seema Modi here now with the details. Seema.
Brian, Beijing is urging its domestic tech companies to stop using NVIDIA chips. That's according to Bloomberg, citing sources. China remains an important market for the U.S. chip makers. And for China, NVIDIA is an increasingly important supplier, despite U.S. export controls that prevent the company from shipping its most powerful AI chips into the country. The Chinese are going as far as smuggling NVIDIA's chips into China and accessing its GPUs through U.S. cloud providers like Amazon. And while Chinese tech giant Huawei is trying to build up its own AI chip, Brian, we spoke to a number of experts. They don't say it stands up against what NVIDIA has on the market. And NVIDIA is also said to be working on a China-specific chip that appeases current U.S. export controls. But as we've seen in the past, pressure from Beijing has worked. Case in point, the U.S. industrial sector, where companies like GE and Caterpillar are now facing more competition on the ground from Chinese competitors.
Does this feel a little bit like a you poke me, I'll poke you, Seema, because we've been layering some, since the Huawei days of a couple of years ago, we've been layering these restrictions on Chinese products here, and it just feels like you do wonder, is this more of a real, well, where China's really concerned about NVIDIA versus you're going to do it to me, I'm going to do it to you?
I'll do it to you. Exactly. In fact, it comes just weeks ahead of what we're expecting is a U.S. commerce rule on limiting U.S. memory chip sales to China. So to your point, this may just be China trying to take a step forward here as we, of course, wait the winner of the presidential election, where there is bipartisan support from Democrats and Republicans to be tough on China. Brian.
Seema Modi, a big headline there, and just another sort of tit for tat, China, U.S.
NVIDIA offers solutions for networking, computing, and graphics. Renowned data storage company NetApp recently revealed that has developed an advanced generative AI data vision and end-to-end integrated solution using NVIDIA AI software and accelerated processing power. The product, which is marketed by NetApp and leverages intelligent data infrastructure for enterprise retrieval augmented generation, will add new features to the NetApp Unified Storage Operating System. These features can be leveraged to unify data stores for the tens of thousands of enterprises that rely on NetApp for their data infrastructure, through the use of a new NetApp Global Metadata namespace. According to the most recent rumors, NVIDIA CEO Jensen Huang has finished the trading plan that was approved earlier in the year, according to American publication Barron's. The magazine claims that Huang made $713 million by selling stocks that he executed using his Rule 10b5-1 trading plan, with an average price of more than $118 per share. According to the article, the initiative was supposed to run until March 2025, but it sold every share authorized 6 months ahead of schedule. Based on the most recent analyst ratings and news, NVIDIA is ranked #1 overall on our list of the trending AI stocks. Even though we think NVIDIA has potential as an investment, we are more convinced that some AI stocks have a better chance of yielding larger profits in a shorter amount of time.